Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. Bitcoin is currently sitting at 109.5 thousand US dollars above the weekly range high. Having broken through the daily diagonal downtrend, now retesting the major level of resistance at $110,000, Bitcoin is poised for a dramatic move. Will Bitcoin break through this critical level of resistance, facilitating a move potentially as high as 120,000, or are we going to see one final rejection? In today's video, we are going to be discussing the short-term price action, the macro charts, the total cryptocurrency market cap, the total altcoin market cap, as well as discussing the one big beautiful bill act passed by President Donald Trump and the impact this may have on risk assets and the economy moving into the next few months and years. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and really everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can also join us in the VIP group. To do that, click the pinned comment of the free channel, contact our admin by clicking this name, check out our 53 plus month trading track record, or watch a 10-minute video showing you inside the channel. You'll get access to two channels, the main trading channel, and of course our exclusive group chat. Go ahead and check it out. We'd love to have you in there. Let's jump into the content. So taking a look at Bitcoin here, we have seen two major things occur over the past 24 hours. Number one, we have retested that critical level of resistance at 110,000. We zoom into like a 30-minute chart over here. We can see we have pushed into this major level of resistance, and we have seen an initial short-term rejection with, of course, that bearish divergence printing, indicating a degree of weakness and exhaustion developing over here. But we've also seen the price come back down and retest that daily downtrend two times over here. In both instances, bouncing. We are still sitting above that 50 EMA. So we can see at least a degree of attempting over here, or should I say the buyers are attempting to keep the price above this critical dynamic level, which is going to be, again, that daily downtrend. As we can see, this is a major level of resistance, because above this region we enter price discovery. We enter a VRPV gap. Essentially, we have no historical trading volume above this level of resistance, minus a few hours of price action, and therefore volatility should significantly increase if we are able to break through what has been a 4 to 5 week long horizontal resistance, which should facilitate a massive directional continuation upwards. Again, the longer these consolidations, the larger the reactive move we see upon the breakout. However, resistance is resistance until it is not, and in today's video we're going to be discussing what it means and the potential for rejections, as of course we are seeing some degree of weakness develop at this resistance. Let's jump into it. Let's start on the market data. So 24-hour volume and liquidations. Volume down 10%, 228 billion. Liquidations down 33%, 214 million. A pretty even split over here. A little bit more of the short side being liquidated, 128 million. In comparison to 85 million. Jumping over to the DXY, the DXY is continuing toward the downside, and that is going to be expected, especially with the de-escalation in the global conflicts, the potential for future interest rate cuts being more, more likely as a consequence to these trade deals potentially coming to an end, coming to an agreement. And of course, we've also had that big, beautiful bill act passed, I think yesterday, or maybe even been today American time, which does have some long-term economic implications, which could push the Federal Reserve to QE and of course to drop interest rates. And again, this can take some time to play out, but the market is reactive and it is front running, and it does front run and tries to price in what is expected in a future date now. So we will likely still see see the DXY drop unless we see any dramatic shifts with, again, the global conflicts or the trade deals. We'll come back to this act in just a second. Let's move over to the S&P. The S&P 500, it had an amazing last few weeks, guys. We have seen a fantastic breakout of that weekly range high. Again, we're just going to go ahead and delete some of these drawings from our last video. We have broken through the weekly range high, closing a weekly candle and even opening a new weekly candle above, which is a great sign. We can see here we are holding steady, having reached that next target of ours, which was 6,300. As we mentioned, upon the breakout, we were looking for 6,300, 400, and 500 as potential targets. These whole numbers often act as psychological levels, since we do not have any price action above or in this range. We are in price discovery. We don't have any historical evidence to see how price is likely to react at particular horizontal levels. So we watch to see how the price develops in real time, and we set hypothetical speculative targets, sometimes around psychological levels. Again, whole numbers where people are most likely to look to take profit or to exit the market. In a overall direction, we are still very much bullish. We are still very much in an upward trajectory. That is going to remain while we sit above this break of structure. If we sustain above this level, we are expecting continuations higher. Only upon the loss of this region would we then expect a higher time frame correction, which could take us back to the 50 or the 200 moving average, but that is not happening at the moment, so all is well. Let's go ahead and jump into Bitcoin. Like we said, we have a lot to discuss. We'll also discuss that big beautiful bill act, because it does have a lot of relevancy to cryptocurrency, particularly the risk asset market. So when we're looking at interest rates, when we're looking at expectations for Bitcoin performance in the macro, and when we're looking at something like the 4-year cycle, this is relevant because it is something that could dismantle the 4-year cycle theory too. So let's jump into that. Before we do, a quick word from BitGet, BingX, and BitUnix. If you're interested in finding a new exchange to trade on, you can go ahead and sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content for you on a daily basis. And of course, you'll be trading on exchanges I use and I trust. We'll play a quick ad and we'll jump right back into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get right back into the video. Now, I want to start by talking about this act, this bill passed by President Donald Trump. We're going to be discussing the implications this will have on the risk asset market and why it's relevant, and I guess how we can look at this to dismantle potential theories for the 4-year cycle, even if this does play out as expected. So again, if you want a full detailed post, go to Telegram. I wrote up a massive post over here talking about all its implications. You can check it out. But to put simply, the economic impact for this bill is to significantly increase government spending and debt. That is essentially what it is. The bill is projected to increase the US national debt significantly. That is essentially what this is, about 30%. Now, with that, the Treasury will issue bonds to borrow money. Investors, banks, countries, funds buy those bonds, and the Federal Reserve may step in to buy these bonds if demand is weak, and that is what we call quantitative easing. That is generally what we would consider money printing. So money comes back into the market, we get a surge of liquidity, which pushes asset prices up. Now, whether or not they come in to buy these bonds will be up to their discretion. Again, the Federal Reserve may interpret this bill as inflationary. If they do, they may delay rate cuts, which is short-term bearish, right? But if they don't, they may speed up the trajectory for their interest rate cuts. They may cut sooner, which is going to be bullish. So it does come back to how the Federal Reserve interprets this, how they look at this, review it, and then determine their course of action. So we're going to get a lot more insight into what they think, hopefully, in the next Federal Reserve meeting, which can also shine some light on our end of what we should expect. But overall, guys, there are some risks of this. Like we mentioned, the risks are that deficits continue to grow. This will result in the money supply increasing, inflation could return or get worse, and the dollar could weaken over time. Now, these are economic risks. In terms of the risk asset market, these are actually going to be bullish for risk assets. So we look at all of this, money supply increasing, inflation increasing, the dollar weakening, all of this results in the risk asset market going up. So again, when we're looking at risk assets, massive deficits result in more liquidity, okay? Constant government borrowing increases the chance the Federal Reserve will drop interest rates, decreases the cost of debt, which results in, again, lower debt to service ratios, which increases the borrowing capacity for companies and individuals to purchase income producing assets, to leverage the income produced by those assets to acquire more risk assets. And the cycle goes on. We see more liquidity, more asset growth as the US dollar drops in value. If we're looking at the political austerity, again, this does show that both parties are interested in moving towards interest rate cuts. This again reduces the probability of debt ceilings, spending cuts, tax hikes, etc. And this is perceived to be bullish by the market, as the market does like predictability in spending, and we do see the market front run any sort of insight to this. Again, the weakening US dollar results in asset prices generally being higher, as asset prices are valued against the USD. So naturally, as the USD weakens, the amount one USD can purchase of asset becomes lower, and therefore the asset price in comparative to the USD increases. So that is the general gist of it, guys. We do have to see how the Federal Reserve interprets this, but when we're looking at the overall macro sense, we're looking at like 6 to 18 months down the line, potentially 12 to 18 months down the line. The implications this bill has laid the foundations for is a macro bullish environment. So if we go back to this flow chart we talked about, we've been talking about for the last 2.5 years on this channel, which is this flow chart. What is essentially doing, it is increasing the potential for interest rates to fall. In essence, when we're looking at it from a risk asset perspective, that bill goes to do a lot of things, but one of the main things is it results in an environment which increases the potential for interest rates to fall, which then results in this lead on effect, which is a delayed economic response. But when we're looking at the risk asset market, it's acute. We see this acute response in the market, which is the asset prices increase. So that is enough of that. Again, I haven't done too much research into it. I've only looked at it for about 5 minutes before I made this video because it is quite early here in Australia. So if I'm wrong on anything, I'm going to go back over it, but I'm pretty sure, I'm 99% confident this is how it is, and maybe there might be some more information that does come out. But the key thing is we have to see how the Federal Reserve interprets that, as the interpretation is going to influence this, and this mechanism is what drives assets up or drives assets down. So let's jump into Bitcoin, starting on the 4-year cycle, because this does link into that. We know already the 4-year cycle is expecting a top in August to October 2025. The negative 2-bar theory suggests August. The traditional 4-year cycle, 1,064-day bar theory, does suggest October 6th. When we're looking at that, that gives us a 2 to 4 or a 3 to 4 month range before a potential top. And when we're looking at something like the Big Beautiful Act, or we're looking at the mechanism resulting in asset prices rising as a consequence to interest rate falling, that is going to be bullish. So we've got this conflict here between policy, which can promote demand in the asset market, which will occur over the next 6 to 12 months. And then we've got our 4-year cycle theory, which suggests over the next 6 to 12 months, we're going to be moving in a macro downtrend. So again, the 4-year cycle will unlikely hold forever. At some point it will break. Will it be this time? it is potential, it is possible, but we have to wait to see how things develop. There's no way to be 100% sure what is going to happen. We have to take it as it comes and adapt to the conditions as they evolve around us. But something to consider as we get more and more information, which can go to build a bullish case over a much higher time frame. Will this avoid or prohibit potential corrections? No, corrections in the market are perfectly normal. The question isn't, are we not going to see corrections? The question is, are we going to enter a bear market? As we discussed already, for us to enter a bear market, we need to see a loss of what is the 50 EMA and the Gaussian channel upper band. If we look at when we started the bull market initiated from a structural breakout of the level at around 30,000 to 31,500. This, of course, was the prior bull market support level, okay? The consolidation at the prior all-time high, horizontal support, current support results in future resistance. And what we saw here, this level of resistance held between May 2022 all the way up until October 2023, about 1.5 years. When we broke through this resistance, we saw and we have seen a direct continuation upward ever since. We have been in a bull market and we are still technically in a bull market, okay? This bull market has been slightly different to prior bull markets, not in the sense of the direction, but in the sense of the intra-week and intra-month, the month-to-month price movements. We've seen a lot more indecision, a lot more consolidation, a lot less reactive movements for altcoins, especially sustained movements for altcoins. And overall, there has been a lot more external implications this cycle than what we've seen in last cycle. We just had money printing basically permanently for months on end, okay? But nevertheless, we are still in a bull run. We started the bull run upon the breakout of the Gaussian channel on the 50 EMA, and that is the point at which we are watching for the end of the bull run. So if we drop below this region, that will trigger a larger correction towards the 200 moving average, which could trigger a bear market. So that is still possible, but it is not something we are at risk of doing immediately as we are well above these levels. If we are looking at the current short-term price action, we'll come back to this in a second. For us to see any sort of correction which could take us to the Gaussian channel, we would need to see a correction as low as 90,000 US dollars, right? So where are our key supports? We can see from where we are currently sitting, we have got 1, 2, 3, 4 major level of supports before we run the risk of even touching that Gaussian channel on the weekly. Critical levels of support, again, marked out by the gray boxes, 104,000, a prior higher low from our recent low at 98,000. We've got major levels of liquidity at 96, that runs all the way down to 92,000, and only upon the loss of 92,000 do we enter a massive VRPV gap of around 8,000 US dollars, which could result in significant bearish volatility and steep corrections. So that is not really too much of a concern right now. For us to see any sort of move toward that downward trajectory, again, a breakdown of the horizontal consolidation would take us down to 92,000 as per the measured move. But at the moment, the probabilities are in favor of a directional upward break in context of, again, the 4-year cycle, in context of, again, potential interest rates reducing, in context of, again, de-escalations in global conflicts, and again, in context of the news, the tariff news, and the trade deals coming to a close. So the policy is lining up to facilitate an environment which is more certain, and a more certain environment gives the Federal Reserve a better insight into what they are going to do. And if they have a better insight to what they're going to do, they can give us better information of when these things will occur, particularly interest rate cuts, and the market can be more reactive to that in an upward direction. Now, that doesn't mean we are out of the woods, right? We are definitely not out of the woods because none of these things are confirmed yet. We are still under a critical level of resistance in which we need to break through 110,000. So let's start by talking about the worst case scenarios and then jump into the bullish targets and expectations. As we can see, resistance is resistance until it is not. We have rejected from here twice in the past, and we are actually rejecting from this for a third time. The big thing is with this rejection is we cannot see a loss of this change of character level. The change of character level, you can see very slightly over here, is sitting at around 108,700, just a tad higher, a few dollars higher. If we see a correction under 108,700, this will mark this as a full-blown rejection, and we will likely see a correction back into our major level of support at 105,000. So the risk of a correction back to 105,000 is on the cards. Now, even if we see this move, it is important to note that 105,000 is the line in the sand preventing Bitcoin from going lower. If we lose 105,000, only then do we shift our expectations bearish toward the downside. If we see a correction back to 101,000, that is going to be a good potential reversal point for the price to occur again, okay? So, short-term rejection, what we can see on the short term, going to a 30-minute chart, we do have weakness here. I'd be lying to you if I didn't say we did. We can see bearish divergence playing out. We can see lower highs in the price action. We can see a reduction in volatility as the price action compresses against the 50 EMA, all happening underneath our horizontal resistance at 110. Again, the level of which we need to hold above is going to be that level, that change of character level, horizontal line, the point at which we retested perfectly on NFP news release. Therefore, if we drop below that level, we would expect a steeper correction, which could take us as low as 105. I think a logical target would be over here, 107.2. Let's hypothetically say we see the price go up. What will we need to see? Well, we need to see the momentum flip positive. So at the moment, a downtrending RSI representing downtrending momentum, negative momentum. If the RSI breaks upwards, there's a good chance we come up to retest 110 again, 110.05 again. Now, when we're looking at the upcoming economic news, we have got some key events. We have got on the 15th, so in about 11 days, inflation data. Now, the inflation data at the moment is forecasted to actually come slightly higher. Now again, we did see NFP come in slightly worse than expected, with unemployment rate dropping, again leading to potentially a strengthening market, which could result in inflation going higher. We saw NFP coming out slightly higher than expected, but not very much, very marginal. But overall, the inflation data is now expected to come out very slightly higher. So it is pretty bold of the market to, if we were to see a direct rally over here before this CPI data, I think it is more likely we struggle to break through, potentially see some short of flushes toward the downside. Before then, we maybe continue back upwards, provided 105 is able to sustain. But when we're looking for immediate bearish triggers, again, breaking this level, losing the 50 EMA is going to be that sign for a correction downwards. Until then, there is hope for a reversal in the short term. Moving over to the weekly, and then we'll wrap this video up. The weekly is looking good, but again, not out of the woods for the weekly to be officially triggering the next move up. A weekly close above the RSI, a weekly close above at least 108, or basically let's call it 109,000, and the weekly RSI is needed. So we got that weekly close in 3 days from now. Total cryptocurrency market cap, again, it is at resistance. Another reason why I'm not expecting an immediate breakout for Bitcoin. If we do see the breakout for Bitcoin, we will see the total cryptocurrency market cap breakout, and that is going to trigger the next leg up for the market. So again, when we see that break of 110, which is not happening right now, we are rejecting, but when we see that break of 110, the market is poised, it is positioned for an aggressive rally, not just for Bitcoin, but I do believe we will see the altcoin market perform exceptionally well when that occurs. So we're right there, we're very close, things are falling into place, there is still a bit of uncertainty, there is still some things that need to be ironed out, but it is looking good, there is hope, there is potential, and we just have to cross our fingers to hope that it does go toward the upside and not downwards. But if it does, we're prepared, we react, we trade level by level, emotionless, without bias, without preference. You just trade the trend. Thanks for tuning in. Have a fantastic day. Catch you guys in the next one. I'll see you then. Bye.